Welcome back to Milwaukee Market Update. We're covering real estate news and data and breaking it down to help you understand how it impacts your real estate decisions. Teaser, what happened in the 2023 real estate market and how you can prepare for the future.
What to take away this episode? What changed over the course of 2023? Was 2023 the worst year in real estate?
Definitely.
What will win? The millennial housing boom or the baby boomer crash? And are white Christmases overrated? Ty's got some opinions.
We're here to give you the info you need to make the right decisions regarding your real estate. Should I buy a home now? Should I be selling? Is the housing market about to crash? Are these headlines I'm reading, content I'm seeing on social media true or even relevant to me? If you're new to the show or returning because you found value in our previous videos, it would mean the world to us if you could take a second to subscribe either on the podcast or on YouTube. You can follow us on TyAsh31 and Nick Harrington28 and reach out via MilwaukeeMarketUpdate.com. I'm Ty.
I'm Nick.
With Houseworks Collect at Compass, your local real estate experts. All right, let's start with our quick tips, starting with our buyers out there. I think this might be one of the things that helps buyers the most get ready to actually buy their home that most agents don't do, and that's going through a mock offer or a practice offer, which is going through our whole offer to purchase document, giving them an example of when you tell me this home's 9 out of 10. I like this home a lot. 9 out of 10. Mm-hmm. How can I be competitive against maybe other offers that are going for the same home? Going through that 30 to 40 pages worth of paperwork really helps you get prepared to know, like, what are the leverage points? What are the things you can control so that you're not making a decision 1 hour before the offers are due, and you can actually move quickly and confidently, as opposed to it's the very first time you've ever seen this. Am I being, make a grave error, or like, am I actually putting the best offer together that's right for me?
Yeah, I agree. Especially the first offer. There's a lot of nerves involved with it. Mm-hmm. And the last thing you want is to make that decision in a rushed situation where you don't have all the information of what does this offer even look like.
Yeah.
Like in the market now, you still have to be Johnny on the spot and be quick with submitting offers.
Yeah.
But the more that you can do ahead of time to understand what this offer actually looks like, so when it gets emailed to you, hopefully you have an agent that's actually reviewing it with you after, but at least you're familiar with, okay, what is even the purchase price and where do I find this on the offer?
So you're saying, no, I got you. Trust me.
Yeah, hey, just e-sign. You'll be okay.
Maybe a slight yellow flag there if they haven't taken the time to review it.
Maybe a red flag. I wouldn't even say a slight yellow flag. I'd put that as a red flag.
There you go. So now moving on to the homeowners. I think this is, essentially something that we get asked a lot of, like, how do I make sure that I'm like getting my home ready? What are some things that we can do? And this is maybe one of the hardest things for the agent to say to the homeowner, but you need to declutter your home and you need to clean your home. We tell everyone that, so don't be offended, but like, if you can just take out all of your like personal effects, pictures, and have as little as possible out there, like that simplified feng shui, like get your home to that point, I think that's the biggest thing you can do. And it's the first two things we talk to every single seller about.
Yeah, I agree. And I mean, I think it's never a insult to the person. If someone were to come over and say, hey, list my house personally, they would say the exact same thing. And so, but even for photography, to me, that's so important. You want your eye to be able to scan across the image smoothly.
Look at the space.
And the more things that you have on the countertops, the easier it is to get distracted and kind of lose sight of what the whole home looks like.
You don't get to see yourself in the home. You just see what the heck is going on with the person who currently lives in the home, so you can't visualize it. And that first room impression is huge. Whatever door they're going to walk into, take off their shoes or put on their booties to make sure they don't track in snow and sleet and rain. They're going to look at that room and be the most critical at that point in time. And if you impress them in that very first room, you're going to get the best result.
Yeah, the first impression is so important.
Yeah.
Even having like a door that's painted or having like the entryway trim look nice and clean.
Yeah.
That's going to be what people remember, as silly as that is. Like it's the first impression is so important.
Yeah, because then everything else kind of starts rolling together, and it's the story of the home. It's the feeling of the home.
Yeah.
Totally agree. What do you have for our investors out there for a tip?
Yeah, so I think a lot of the investors I work with, and you as well too, cash on cash is probably the most important piece a lot of investors look think you hear these success stories of I bought 10 rental properties and I'm retired. And those stories are out there. They exist. The only way people that can do that is through high cash on cash return. But I think that misses the big picture of why people invest in the first place. When people think about investing in a brokerage account or 401k, you don't use the term cash on cash return because it's not a thing.
No.
You know, it's you're putting money in there with the goal that it's going to appreciate in value. Real estate investing is the exact same way. It just has the added benefit that you have cash flow to it too.
Yeah.
So I think it's very important that when you're running numbers, cash flow is important. You don't want to be coming out of pocket every month for certain properties, but also if you're not running your numbers, accounting for just even a modest appreciation year over year that's compounding, you're missing a huge chunk of the benefit of real estate investing when you're running your numbers.
Yeah. And just the quick calculation here for cash on cash is just your annual cash flow after all expenses. So that's your monthly payment for your mortgage. It's your operating expenses like management, maintenance, CapEx, vacancy. That's going to give you a cash flow number, based on how much rent you collect. You just then divide that by how much money you invest into the property. So if you collect, say, $3,000 for the year in cash flow, and you bought a $200,000 property for 25% down or $50,000 invested, that's a 6% cash on cash. People like to see that and compare that to investing into the stock market, but there's obviously all those other benefits that you have of investing in real estate as well. Appreciation, some tax benefits, and having somebody else pay down your mortgage over time.
Yeah, and I use this story a lot. The first place that I bought it for $225,000, downtown Milwaukee, duplex. It's probably worth conservatively $330 to $340K today. And it's got some cash flow. It's modest, but it's not like a cash flow machine. Yep. But I've been able to make more in appreciation in that 3 years than I would for any property that you could buy in Milwaukee right now. Yep. So it's just one other consideration that's incredibly important to look at when thinking about buying an investment property.
Yeah. Unrealized gain, but there's a lot of strategies at year 5, year 10 for you to actually realize that gain and redeploy or actually live off some of that growth.
Definitely.
So very cool. Well, next we're going to dive into the MLS stats. This month we're doing a bigger focus on what happened in 2023 and maybe give a little bit more tips and tricks of what we can do to be successful in 2024. What were all the events that actually happened in 2023?
Yeah, it was a crazy year in 2023. Let's kind of just start there because I think the market had a lot of headwinds. And I think most of the headlines that people are going to see, which we're going to talk about these headlines later, it's one of the worst times to ever buy a house. It's the worst real estate market of all time. And we saw a full life cycle of what this market was at the start of the year last year to where it is now. And I'm excited to kind of talk about this because
I am too.
Yeah, I'll let you dive in here.
Yeah, perfect. So we're going to start with new listings like we always do. So for the entire year of 2023, 17,700 homes were listed. That's down 14% compared to a year ago where we listed just over 20,000 homes. So new listings was down. That was a narrative that we kind of spread for pretty much the first 6 or 7 months of the year until at the very tail end, we actually saw a very slight increase year over year. Then we go to pending sales. So this is not something that we really track on a yearly basis, but we did end the year with some positive momentum because, again, essentially pending listings, so when you get an accepted offer, follows the new inventory. So we started the year probably with having some down numbers because the closing stats were down. Now going to close sales, 14,600 homes closed in 2023, down 17% to a year ago when we sold 17,000 homes. And what's interesting to see there, if you kind of look at the actual number of homes that we were down in sheer volume of homes that were listed, was almost exactly the same of how many homes we were down in what sold. Right around 3,000 homes that weren't listed versus 2022, about 3,000 homes that didn't sell. It's kind of weird how those things all kind of correlate.
Yeah.
Then we get to days on market. That's essentially days until a home gets a accepted offer. 21 days versus 21 days a year ago. So again, we saw very similar pace that the market was moving at. On an average was about 3 weeks. The big thing we always like to talk about here is there's a lot of stale inventory that will drive that number higher. The typical home, especially in some of the better neighborhoods, the higher prices, better school districts, we saw that definitely being under a week. Then median sales price, we essentially the median average for the year was $318,000 versus $295,000 in 2022, up 8%. That's essentially where we end the year in terms of appreciation. The last 3 years, we've seen 8 to 10% year over year median price growth. Average sales price, $374,000, up 5.5%. And then percent of original list price received or percent over asking. We ended the year with an average of essentially 101% over asking versus 2022, 101.3. So relatively the same, came down just a little bit, which is actually, I would say, generally a pretty impressive feat, knowing that in 2022 we still had at one point in time 3-4% interest rates, and last year, this last year in 2023, I think we got up to 8 at some point, which is impressive to see that you're still seeing the market move at that rate of over asking.
Yeah, I'm with you. If we kind of take a peek under the covers,
okay,
what I kind of think about the theme for this year was there was a lot of unknowns going into this year. Like if we flash back 12 months, January 2023, a lot of agents were kind of in like a WTF is going on? What's happening with the housing market?
Yeah.
There was a lot more uncertainty, I would say, a year ago than there is now.
Yep.
Rates, we all had this feeling we're going to keep climbing. Everyone kept saying rates are going to drop, but we didn't see the rates drop until like 2 months ago.
Yep.
And the start of the year from January to July, we saw a massive decline year over year in the amount of new inventory that hit the market. And then that trend completely shifted to being inventories now basically flat for the last 5 months of where maybe a little bit up from where we were that time this year to last year. And so to me, when I look at just a new listing activity, I'm starting to see this market become a bit more stable.
Yeah.
In terms of like, if there's one trend, it's the market has kind of stabilized from this crazy swing we saw during COVID, where things are kind of becoming a little bit more normal, a little bit more predictable in terms of what's happening. We're kind of seeing interest rates are starting to kind of level off a bit, less fluctuations there. To me, this has been like a very stabilized market. We're kind of coming to this smooth, predictable.
Some of the buyer patterns are returning too, where it was relatively slower for some showing activity. I know that we're at some all-time lows of mortgage pre-approval rates. But that's also because we're going into Q4, very slow time during the holidays of the year. Like you're seeing some of these more normal seasonal patterns. And now I know we just recently talked about a good amount of new listings came on over the last 7 days here, right in the middle of January. And it was busy. Open houses were busy, which is not necessarily the comments that we've been hearing from other agents. I went on 4 showings in the Bayview yesterday for a single family 3-bed, 2-bath house, a very common search. Every single open house had multiple parties. And we had overlapping showings for a couple of the showings as well, which is a little bit more resembling of early 2022 for sure. And it's going to be interesting to see where this goes. A lot of people are like, oh, well, spring market's not going to start till spring. No, spring market is here. This is when new listings start coming up and start ramping up the amount of options available. A lot of buyers might have been discouraged the last 30 days or so when no one's listing their home right before Christmas because most sellers are intuitive. Why would you list your home right around like 2-3 big holidays?
Yeah. And I'm with you. The last couple of months, it feels like whenever I've gone to see showings for new listings, I might be the only agent in there. And this was like the first weekend, I feel like, where you kind of have that feeling when you walk in, like, oh my God, this is a party in here. It's not even an open house. And like when you start to get that feeling that you're at an open house for a scheduled showing that you have, that's one of those like shifts that you can start to see in the market of, buyer demand seems stronger than ever. We can continue with the stats here. Yeah,
totally agree. So again, just a deep dive into that new listings. Essentially, we had about 7 months that were on average anywhere from down 20 to down 25% in new listing activity, 2023 versus 2022. And then August through December, we switched that to where we had a slightly positive momentum in terms of that new listings as we got closer to lapping interest rates. That's something that we had talked about. Right now, we're actually sitting almost pretty much apples to apples interest rates this year versus last year. We'll talk about that here in just a second. Then moving on to like close sales, we're going to kind of bypass the pending because most homes that come under contract do end up closing. Then you kind of look at, okay, how did that new listing activity impact the close sales? The last 3 months essentially of 2023, we saw flat to not as down numbers. The year we ended, close sales being down about 17% versus 2022. So I think that's interesting that essentially we know what's going to happen as listings come new. So anytime that people are like, I'm not feeling good about the economy, I don't know what's going on, I'm kind of nervous. Well, all you have to ask the question is, what do we think is going to happen the next 3 to 6 months? we can usually give you a pretty accurate estimate of what's kind of going. Obviously, as we go out 1 year, 3 year, 5 year, 10 year, we don't have a crystal ball. But if you want to know what's going on in your local market, all the way down to the suburb, the neighborhood, we're going to be able to give you a pretty good indicator of what you can expect for this year.
Yeah, and that shift was big because that was kind of, we were looking at these stats every month, new listings down 20%, new listings down 15%, and then we kind of had like a little party when it was like, we're flat. Yeah. Granted, we're looking back now over a year of
lower numbers,
relatively lower numbers, but we're not seeing this continuous progressive decline in new listings, which if that would continue, that would really, I think, strain the market. But I kind of think we're approaching this, like, I hate the phrase, the new normal, but I kind of feel like this is kind of the new normal in terms of the market. Is I think that we're going to continue to see inventory kind of follow the same trend year over year from where it was last year. Now that we have rates where they are, the buyers are understanding this is what rates are. Sellers are going to become a little bit more, I think, open to selling, understanding that rates aren't really going anywhere here in the foreseeable future. So I kind of feel like this last 4 months that we saw is kind of a snapshot of what is to come here.
Yeah, a little bit less frothy. Yes, there was multiple offers, but not every single home was guaranteed to have 5 to 10 offers. Like, it was a little bit more palatable for somebody coming in as a first-time home buyer. You know, the percent over asking wasn't as crazy in a lot of cases. We're actually getting under asking on average over here in the market. So it's a little bit easier as you kind of go through that. Circling back to the median sales price, again, we kind of ended the year at around 318. We peaked at 350 for the entire year. That's normal in terms of the seasonality, what we see, up 8%. I feel like as we look at like new listings and closed, like low single digits, I think is like what everybody wants to get that like stability. Like if new listing activity could be like up 1 to 5%, great. And if our closed activity could be up 1 to 5% and home values could go up 1 to 5%, everyone would be like very appreciative of just like some normalcy, because in all honesty, like we should see new listing growth every year because there's more people needing homes every single year. Like we want to see a little bit of stability and growth. So hopefully we don't all of a sudden see ditch to ditch of down 20 new listing activity last year to now we've got up 20%, because then everyone's narrative is going to be the influx of inventory, too much homes coming available too fast for buyer demand, though I do think we'll have the buyer demand to keep up with that, driving the sales price up in the future. And kind of like rounding out our what happened in 2023 and honestly over the last couple of years, months of supply. This is the most important thing. Like if you just want to wrap your head around one stat to know, is it a good time to buy or a good time to sell? Is the market like approaching a potential inventory problem to where it's going to crash in prices because there's not enough buyers? It's months of supply. It's essentially measuring that supply-demand relationship. We've been at essentially 2 months of supply going up or down 0.1, 0.2 since 2019. So we actually have a very, I guess you could say, stable market. It's very predictable. We know that it is still a seller's market, still a seller's market, still a seller's market. We ended the year here at 2 months of supply. Last year at the end of the year, it was 1.7. Healthy is about 4 to 6 months. The last time that we saw that was all the way back in 2019, where we barely inched up to 4 months of supply as we got to that slower months of December, January. If all of a sudden we get that big influx of new inventory and we start seeing that spike up and we see all of a sudden a jump from 2 to 3, or worst case even 4, like one, I think that's healthy for the market long term, but that would actually be a big trend change to say, maybe we should kind of slow our roll a little bit and kind of watch and see how this all shakes out.
Yeah, and I think we always typically see months of supply kind of tick up in the winter.
Yep.
Because nothing really happens in December. It's kind of like everyone's traveling. Not a lot of new listings are happening, which is why we're really not focusing on the December metrics too much. But we really haven't seen that like shift in the increase in months of supply for winter yet, it feels like.
Yeah, January is definitely like the big month where last year we saw it peak. So in 2023, January, we saw 2.5 months of supply. That's probably the highest month as I look at this chart that we've had, dating back to almost pre-COVID, it looks like.
Yeah.
And sometimes that makes sense. I mean, a lot of people were listing their homes and buying. I think that's right around when, rates were okay, palatable, like everyone's getting used to it. Like, no, the market's not going to crash. I think it'll be interesting to see, do we get to healthier levels of supply relative to the demand we have. But any closing comments that you have in terms of what we saw here in 2023? I know we have some articles that we'll kind of circle back on as well.
I mean, to me, it's becoming very predictable, where I feel like sometimes we do these podcasts and it's like an episode of Groundhog Day, where it's like we're saying the same thing over and over, which to me makes it easier for a consumer to understand what's going on. Mm-hmm. If it was opposite and we were saying 1 month was this, the other month is the exact inverse of that, mm-hmm. that would make everyone's job very difficult to provide actual advice.
Yeah.
The more that we see this continue, mm-hmm. the easier, the more predictable it will be. I think it's going to help people to make confident decisions. The more predictable they expect the market to go.
And I know that's advice that we've given to investors before. It's, hey, if you analyze a property today to see if it's a good investment, over 3 months of running an analysis a day, you're going to feel really confident about what's good, what's bad, what's different. It's the same thing for a homeowner, that if you're looking at a new location and you get set up on an MLS search for the area that you're wanting to move to, and you see what's going on every day, just like we watch full time as our careers, you're going to be comfortable and not even have to necessarily rely on your agent. They can help you interpret what's mm-hmm. going on, though. It's like, if you can monitor the market where you're going to be moving to for several months, you'll see the exact same patterns that we do, and it just seems intuitive. That's like, yeah, this feels good. It's not going to bottom out on me, or I'm not going to mistakenly wait 3 months and all of a sudden it's going to appreciate over time, because that huge appreciation was like a 6-month blip several years ago mm-hmm. over an incredibly long period of time of a housing market for centuries. Yeah. So I think that's the big thing to focus on. Now I'll pivot over to the duplex space in Milwaukee County, starting with our median list price versus median sales price. 2023, we ended the year, actually, for the entire year of 2023, year to date, we hit right around 170,000 is typically where they were listing, and then selling for 190,000, though we did peak right around 200,000 for duplex, versus 170,000 in 2022. That's up 11% as we stabilize. Honestly, I think this year-end recap for the two-family for price is probably more useful than the month over month that we do, because there's just so few.
Sure.
There's so few duplex listings and sales that happen in any given month, and I think we'll have that set on the next page. But like, it's a bigger data set of 12 months of activity, and mm-hmm. seeing that up 11% year over year, as opposed to whenever it's like 1 month, like last month in December, prices were up 15%. That's like a 1 month outlier, as opposed to seeing the bigger trend of what's going on in the investor real estate market. Mm-hmm. Then we see days on market essentially hit right around 12 days was the median for the entire year for 2023 versus 16 a year ago. I know we saw a page, I don't think we have it pulled into the slideshow here, where the top investor markets in the country, and Milwaukee sits very clearly at number one in the country of essentially how many investment sellers are there compared to investor buyers, where it's essentially 2 to 1. There's 2 buyers for every single one investment mm-hmm. or property. You're seeing that here in almost 12% appreciation in the investments.
Yeah, I think it's kind of interesting looking at this and peeking under the covers here. Your average days on market are 32 days.
Yeah.
Your median days on market are 12 days.
Yeah.
What that tells me is you have a bunch of inventory that's been sitting for longer than 32 days.
Yeah.
But the median, if you just look at down the middle,
yeah,
the good ones are still moving fast.
Yes.
And so you've got like a very interesting story here of got a lot of duplexes out there that are probably 60 days plus in terms of days on market. Probably some deals to find out there. I don't know,
if you get the right price.
Yeah. Get the right price. Probably also a lot of sellers that are thinking, hey, I could overlist this and I'll find someone to find it any day
for their walkway number.
Yeah,
exactly. Then we'll dive into the actual under the cover piece, like you said, starting with new listings here on that right side of the screen. We've got this year we listed 2,000 duplexes versus 2,500 roughly a year ago, down 20%, very similar to what we saw in the single family market. Active listings, kind of like where we just ended. I think a better spot to see this would actually be the absorption rate on the previous page. Essentially for the year, we sat at 1.8 months of supply versus 1.8 months of supply last year. Generally, again, we're getting the inventory we need relative to the demand. Mm-hmm. Then moving on to our finally 2 metrics, the pending listings, again, going to be completely correlated to how many listings were listed in the year. Going to sold. 1,400 duplexes sold in Milwaukee County versus 2,000 a year ago, down 30%. So essentially, this actually kind of correlates to how many homes might have been listed that actually didn't sell in the duplex space that were either overpriced or in bad condition. You can see that in the disconnect between new listings were down 20% for the year versus what actually sold was down 29. So, but keeping in mind, the ones that did sell sold super quickly and for a premium versus what, essentially our duplex inventory sold for a year ago, almost up 12% year over year. And to kind of round out our investing section, rents, we ended the year for the average being at essentially $1,220. I know that's an increase versus the last few months that we've been looking at. I know that rents continue to go up. We've seen the Zillow stats that essentially showing Milwaukee rents for the typical rental, which is very close to this average or median, going up right around 5 to 6% each year, which would essentially correlate to probably about $50 per year you can expect to add on your cash flow each year. That compounds over time.
Yeah, good.
So I know we talked about a couple anecdotes, like what I'm experiencing out there in Bayview. I know you said similar. I know you do a lot of investment properties. Any other little stories that we should go into, and what we saw in 2023 versus how we're starting out 2024?
Yeah, I would say so this last weekend I saw 2 duplexes, and then I wrote an offer last week on another duplex, and I'm starting to see that the duplex space has picked up a lot, especially in these A and B submarkets in Milwaukee. They've always been hot, but now I think I'm starting to notice a shift where people are really willing to outbid what I think the market price is worth for these highly sought after duplexes in certain like A and B neighborhoods in Milwaukee. River West, for instance, I saw one that was listed at $360.
Yeah.
Probably one of the higher, more aggressive sales price for a duplex in River West.
Yep.
We received a counter of where that should be. I won't disclose where it was, but let's just say it was well higher than 360.
Yeah.
And that was kind of a surprise to me. They had like 6 or 7 offers.
You're going to make that person who bought it feel bad.
If you're listening out here. And then also you kind of spoke to just the activity that you saw in Bayview. I saw very similar activity with duplexes in the Lower East Side and Upper East Side that I saw this weekend. So it feels like we talk about prices are going up and up and up. And I think it's, as a buyer, you kind of have to make this tough decision. Where are you willing to kind of risk it for an aggressive offer now, or wait and keep seeing that price is going to go up and up and up, and think to yourself, why didn't I do this sooner? Because you're never going to be able to predict the market.
Yeah.
We try to. I think we're pretty smart guys, but I can tell you if we were smarter than this, we probably wouldn't be doing this podcast. And so that's a decision that a lot of buyers are going to have to make, because I don't see prices really softening. I see demand staying the same, if not going up, as rates go down. And so it's a tough decision a lot of buyers are going to have to make right now.
Yeah. And I think what's really hard, we always talk about what we're seeing out there on social media, how you should respond to it. Unfortunately, a lot of times there's 2 different views, and sometimes it maybe mirrors what your fears are or what you're most likely to watch more of, because you're seeing a lot of social content out there saying, hey, there's no inventory. Rates are likely to drop. That's going to increase demand. We said that ourselves. I think that's likely in our Milwaukee market. So buy now. But then you also have people out there saying, I think that it's wrong. Anybody giving advice to buy right now because it should be the right move for you at the right time, which we've also said that here as well. It's like, it's hard to make the decision unless you actually have all the information, but you're going to hear conflicting arguments no matter where you go. There's always going to be a 50-50. Just like every presidential race out there is a 50-50. Every decision you make is a 50-50. You have to make the right choice for you based on the information you've gone out to seek and compare and contrasting, but not get stuck in analysis paralysis. Like at the end of the day, you're trying to determine, is this how much space I need? Is it what I can afford? And do I want to, own this home for the long run? You're going to end up being in the right position. Yeah,
I've got an article I want to talk about later, because I think we'll kind of rehash a lot of that you just mentioned.
Well, I think we should dive into that, but first, take a quick pause. What other stats are you looking for more information on? Ask us in the comments below. We'd love to give you our take on what's coming next in real estate market, especially as we march into 2024. So now let's go into some news headlines. What do you got, national or local?
I got one for you. This is a national headline. Okay. So I'm on real estate, TikTok, Instagram. I think both of us probably are. If you're even looking at buying a home, I'm sure you get the reels on Instagram. Yeah. And it's funny just seeing the massive discrepancy that pops up in there. But I've seen this article probably come up more the last 2-3 weeks than I ever have. Title is, Existing Home Sales Sank to slowest pace in 30 years in 2023.
Yep.
And then they go on to talk about this. When you read this headline, is that a good thing or a bad thing?
Me as myself, when I read that, I'm like, I know what they're saying, and the stat is correct. Existing home sales, the number of homes that actually sold in a given year, is down. But a lot of people assume that means that the price might also be down, because it did happen in some really notable markets, like out in the West Coast, as well as places like Austin or Boise, those big COVID hot markets.
Yeah, and
that's how I receive it. It's a true stat, but it's being misinterpreted to explain something else.
Yeah, I feel like the average, and maybe not, but I feel like a typical person would see this and think, wow, this must be a really bad time to buy my house and a really bad time to sell my house, just from this headline.
Right.
And I think the most important thing, it's like existing home sales, sure, they're at the lowest pace in 30 years this last year. That's fair. But like, imagine going to the store and you're looking to buy tomatoes and there's no tomatoes on the shelf. Like, how are you supposed to buy tomatoes?
The tomato theory.
You can't, And so it comes down to, like, if there's no homes that people are selling, how are you supposed to buy homes if no one's selling it? Like, that's, to me, the reason that home sales are low is because no one's selling their home.
Yeah.
Separate from everything else.
Well, technically there are people selling their home. Like when you look at the, here in our local market, right, we had listings were down 20%, which was 3,000 less new listings for the entire year. And guess what? We sold 3,000 less listings for the entire year, down a similar percentage point. Like, it's what you said, but like at the same time, 80% of the market acted entirely the same, because people move because of the whys, not because of numbers on a spreadsheet or because of the articles from it. I've got a 3-bed, 1.5 bath, and 3 kids. I think I might need an extra bath.
Upgrade.
Time for an upgrade.
And then another article, like going off of what you just said, this is from the New York Times, where they go on to say, headline, is this really the worst time to buy a home? That's what their headline is here. And I think it's kind of like a similar scare tactic. Slowest housing market in 30 years is now the worst time ever to buy a house. And then they talk about here interest rates, affordability, prices going up, less supply historically, which I would say are headwinds for a buyer. No doubt. I'm not going to say that's not true. It is. We'd rather have low interest rates than high interest rates as a buyer. But at the same time, it comes down to, this shouldn't stop you from selling your house or buying your house if you need to do so. Like, if it comes down to, what is your situation and what's best for you at the end of the day, no matter what. And if you need to upsize your home, downsize your home, if you're moving to a different city,
job opportunity,
like that's what matters. And I think we were in this fluffy period for a while where rates were so low, we got a bit spoiled, honestly, where we're like, I could just buy
got
things
way
hand
smarter,
over fist.
way more intuitive. Yeah.
And if we look back historically, this is still probably an average interest rate going back. Sam, you good? Sorry, yeah. Oh, okay.
Producer Sam.
Our producer's leaving
us early.
Right in the middle of my my rant here. And now I can see how I look with my hair and everything.
Looking sharp.
What was I saying?
Fix my posture.
I think we got a bit spoiled with low interest rates, and people kind of lost sight of why they're moving in the first place. And if you have a family, you need to do what's best for your family from a financial perspective, for sure. But also from a comfortability perspective. And I think that's something that the housing market has seemed to have lost sight of, and that people have lost sight of, because they're very concerned with interest rates, which, again, I understand. But at the end of the day, what's best in your situation is going to be different than everyone else. And don't let this the worst time to buy a home, stop you from doing what's best for you in your situation.
Yeah, I've got nothing to add. You nailed it.
Yeah. Getting a little red-faced here saying that. But
what else you got? You got to have more articles, right?
That's the 2 that I got.
Okay.
Do you have anything? Because I got some other things we can chat about here.
Dive in.
What's that?
No, I don't.
Okay, you guys. So let's kind of talk about, you mentioned something kind of interesting. When we were like getting here, we were prepping for this podcast. You talked about the baby boomer generation.
Okay.
And you have this theory that 10 years, 15 years from now, you think we're going to see a massive amount of supply hit the market. I think what we're going to start to see this next year, and I mentioned this, the largest labor pool that we have in the U.S. right now is the age between 21 and 33.
Yep.
And I would say that's probably going to be the largest group of next buyers are going to fit into that demographic. The average age last year for a first-time home buyer was 33.
Yep.
And so if we just say it's going to be 33, we've got probably 33 minus 21 is 12. 12 years of new entrants into the buying market.
Mm-hmm.
And I think we have this backed up demand as well from people that have wanted to buy a home but haven't because of affordability, because of rates. I think we're kind of in this market where we're going to see demand really pick up from a macro perspective. But with that being said, like, there's always going to be people in terms of relocation, kids, divorces, whatever it could be. The 5 Ds, as Robert Refkin talks about.
Yeah.
Divorces, diapers,
Diamonds,
diplomas, death. Like, people are always going to be having a reason to get rid of the home that they're in. It's just, where's that going to go? You know?
Yeah. My counterpoint, my worst case for people, as I reflect on 2023 and everyone's like, when is this going to stop? Is not so much I think we've got a demographic, like a macro thing that's driving our market with undersupply. You go to any source out there that's like reputable and actually models this stuff, like Housing Wire, I think is like a really good one. Like, you're tracking this, you just know there's less homes available, so the prices should continue to go up, but it's going to be hyper local because some markets, like where we're originally from, the Des Moines area, like I'm from Ankeny, they're building houses up the wazoo there, and that's going to be extra supply. It's a local market thing versus, the Milwaukee greater area. Sure, we have some new home building going on, but compared to other locations like Phoenix, Austin, Boise, like all these like markets that everyone knows about, it's just not the same.
Yeah, a lot of my friends are buying in Des Moines, Iowa right now.
Yeah.
And they're sending me the homes that they've got accepted or the homes that they're going to look at. And they're all brand new construction.
Yeah.
And they're all in like the Waukee, mostly Waukee, which we're from Des Moines, so that might mean it's a nice subdivision in Des Moines.
Yeah.
But it's like we have that in Milwaukee, but not
to
in
that
Milwaukee
scale.
or to that scale. You're out in the burbs, like true burbs. Waukee's a bit of a burb, but it's also a different environment, and Des Moines isn't like a city, it's a great place, but it just doesn't have the same offerings that Milwaukee does.
Very cool.
yeah.
I think like the worst case scenario right here, outside of like a black swan event, is there's a lot of wealth out there in the baby boomers. There's a good portion of them that, having done well, they might have a home in the Midwest, and they've got a home that they vacation to. They have 2. They've seen no reason to sell the home that they live in or to go get rid of it when it's paid off at this point in their life. Why would they sell it potentially to go from a low rate, because they probably refinance at some point at a great rate, or they're about to pay it off and they want that security? They're just going to keep it. Maybe they think they're going to give it to their kids or whatever else, but when they actually do need to start simplifying their financial lives, or if they need to move to long-term care, is that the big piece of inventory where these people that have 2 homes or have had their homes for a very long time and have not moved introduce that inventory to the market in a big way? And not only do we have like this surplus of inventory, it's like a surplus of maybe outdated inventory that just lingers and like competes against itself at the end of this big demographic boom we have 12 years from now. So, I know my parents are firmly in the baby boomer, range, and they're 65 to 70. 12 years from now, they're going to be in their 80s and probably don't need a 5-bed, 3-bath house that is huge, because their kids aren't there anymore. They need to downsize. Maybe they need more care, because that's just the trajectory of that person's point in life. Is that an introduction of a lot of inventory at the same time that a lot of our tailwind of the young buyer, being the millennial buyers and the Gen Z buyers, is starting to waver off?
Yeah, interesting. And
so we'll see. I think that's my worst case, though, where it's like, okay, then what? We get to 4 to 6 months of supply, and it's like a market where you go and see a weekend of house showings and you pick the one that you like and you write an offer, and it's great
what
for
a crazy
buyers.
Market that would be. It's just different than what we've seen the last 3-4 years here in Milwaukee. That's interesting. And I think the stat is 68% of homeowners in Wisconsin have a sub 4 interest rate. So the majority of homeowners have a sub 4 rate. And so until that inventory becomes freed up somehow, some way, we're going to continue to see this lock-in effect that we talk about all the time. But I do think as the market becomes more normal, and if we continue on this pace that we've been on the last 4 months, it's going to become, I think, a little bit easier for someone to stomach that. When rates went up for the first time, it's a panic. We don't like change. If rates stay at 6% for the next 10 years, no one's going to bat an eye, because it's just what it's always been.
Yeah. Just like when we talk about gas prices, but at the end of the day, you still have to drive into work. It's a talking point, but you still end up, usually people act differently than how they talk. Like a lot of people are like, oh no, there's no way I would ever be going and investing in the stock market right now. But then you look and they're still contributing 5 to 10% of every paycheck into their 401k because they're thinking about the long term.
Yeah.
Yeah. People usually act much differently than they think and talk.
Say, yeah. Well, also the whole gas price thing is funny because it's like, what am I going to do? Not buy gas? Like I need gas.
Right. So going into some of these other stats that we track on the national topic, starting with housing inventory, we're ending the year here nationally at about 700,000 listings. Again, significantly down from right around 1 million is where we entered into in 2020. The mortgage application data is actually showing a little bit of a bounce back here where we did hit all-time lows, but now we're getting very similar to about where we were a year ago in terms of new applications, new year, new me, time for, people to start talking about their 2024 home ownership plans. Again, these are brand new applications. If some people re-engage in the market, that'd be great. I think what we'll find is kind of if you draw a longer line between 2010 to 2024 where we are now, I feel like we're going to end up in a middle point of where we were in 2016, 2017 of a more normal balanced market, which would be good. Mm-hmm. That's when we got to 4 months of supply and it was a healthier, more balanced market where sellers could have predictability that they could sell and buyers have predictability that they knew what the monthly cost was going to be and that they weren't going to be in this crazy bidding war. Moving into our Zillow stats that we love to share, Milwaukee now getting bumped down to the 3rd spot in terms of home values going up year over year for the typical home, 35th to the 65th percentile. Milwaukee at number 3, prices going up about 8%. Again, we saw that that's pretty much right in line with what we're seeing for all homes in the greater Milwaukee area. So pretty much all homes, even, the more entry-level price point versus the typical home versus the more expensive inventory is all starting to kind of trade right around that 8% year over year. Then looking at rents, we did come up a little bit higher in this ranking, I think right around number 8, sitting right at the high 5s, almost 6% where we're seeing rents go up year over year in the typical rental. So not only are home prices going up, rent prices are going up too. Those should be 2 factors you should consider in when I'm going to buy, timing that, making sure that you can afford it and that you have the money saved up for the home purchase.
What this tells me here, we look at the stat every month. Milwaukee's home prices have grown 3rd most in the U.S. for the average home.
Yep.
Milwaukee rents have gone up 7th most for the average rent of any city. There's a straight up shortage of where people can live in Milwaukee.
Yeah.
Or people wanting to sell.
Being in the top 10 for both of these metrics just means that there needs to be more housing supply.
Yes.
Yeah.
Yeah.
And honestly, we see that in our vacancy rates. I think that was something we spoke to either last month or the month before. Milwaukee, in total for even the bigger, commercial, residential, huge apartment complexes, we're at a 4% vacancy versus the national average is a 6 to an 8. So you see that in prices going up. You see that in vacancy rates being super low. Mm-hmm. It's essentially we have not really built a lot of supply, but Milwaukee's not a very sexy city. We haven't really gotten a lot of that attention of building both single family homes for people to purchase as well as rentals for people to rent from, which I know we've talked about a lot of the nice high scale, studio apartments, $2,000, $3,000 a month. That's not really where the need is in terms of the rentals that we need.
Is, but it's not where the need is for the average resident in Milwaukee.
Yeah, totally agree. Now moving on from essentially, what we saw in terms of price and rent increases is the inflation. So inflation came in at 3.4% last month, which was higher than the forecast. I know that the Fed, I think the biggest thing from this month versus last month is the Fed did start signaling interest rate cuts. And I think maybe we started to talk about that. I don't know that we actually had the report out at this time last month. I think that this inflation report has now gotten people to say, well, they're going to come, but how fast are these interest rates going to actually come as we kind of see this, this inflation kind of bounce up and down, sometimes achieving forecasts, sometimes underachieving it. Yeah, we're going to see rates come down, specifically the ones that banks lend back and forth at. But how long is it going to take to do 5 drops? Historically, drops come much slower than the hikes come. So we saw those hikes super fast over a short period of time. It might not even be that we finish all of the cutting this year. They're going to do it slow and steady, especially if they see negative lines in the data like inflation.
Yeah, I'm with you. And I think too, inflation is so goofy, man. But I think too that I don't know if we're going to see the days of a 3-4% interest rate. You know, if the Fed hits their target of in the 2s for inflation, my thoughts are like, why would they change what the interest rate is if it's working and it's keeping it stable? And so I think something else to consider as a buyer is I don't think we're going to see a time where rates are going to get below 4%. Or if we do see it, it's not going to be in the foreseeable future.
If it happens, it's going to be something like COVID, a massive pandemic where everyone's saying, oh, it's black swan, sell everything.
Yes.
Yeah, it's going to be like, oh, next time that there's 3% interest rates, I'm definitely going to go invest and buy. It's like
10 plus years.
Yeah.
Unless some crazy things happen, like you just mentioned, like a COVID type event, which I don't want that to happen.
But what I'm saying is, like, when people say they're always going to do that because it's smart and they have hindsight, but it doesn't happen because they're going to be scared out of their freaking minds of why would I buy something right now in like this terrible time of COVID or some similar type event.
Yeah.
No, it's like, no, there's no freaking way. Why would I ever do that? It's way too risky.
Yeah.
But then you look back and you're like, that's the best time ever.
Yeah.
Very similar to after the recession. You know, again, usually you need to go against the crowd. Then going to, again, our inflation rate came in at 3.4, core inflation at 3.9. So it's actually kind of interesting to see that our core inflation is getting closer and closer to the total inflation. Again, those are less volatile pieces like shelter specifically. Shelter now down to 6.2. I think it was just a few months ago that we're up in the 7s. So we're actually gradually seeing that shelter of that cost of living for people out there renting, that it's done in 12-month increments. We're seeing it be starting to come down, seeing some momentum there. Moving into mortgage rates, I have two charts here for us. Right now, the 30-year fixed rate sitting at 6.87 versus last year, January 5th, we were sitting at an average rate of about 6.5. So within, essentially 0.3% of where we were last year, it's going to be easier and easier for people to stomach that transition as we get more years and more percentage of the population with similar interest rates to what they could buy today. It's easier to trade from a 6 to a 6 and so on. So like we've talked about before. So, I mean, running through all these stats, again, like you said, it's a Groundhog Day here on the Milwaukee Market Update. But I think that's the best thing is, like, unfortunately, a lot of the articles that people see is like this up and down, positive, negative, and it feels like things are changing drastically day over day, month over month. But then if you're just tuned in here to the show, why do they keep on saying the same thing every single month? It's been very consistent.
Are we doing
and
the
relatively,
wrong thing?
Yeah.
Should we be doing more clickbait articles and giving people
Let's grow subscriber count. Yeah, that's right. No. Very specific advice for a very specific crowd that actually want to know what to do here in our area. Yeah. So I feel like that's the debrief here for buyers, sellers, investors is it is very likely that our local market here is going to continue to see prices going up. So yeah, sellers, you want to gamble a little bit? Hold your property a little bit longer. You're probably going to make another good year of appreciation return on it. Buyers, that exact opposite is it might make sense to buy a little bit sooner. And I can teach you how to save $30,000 on your next home purchase. It's buy now. Just go buy it. What do you got on the investor side? What do you debrief?
On the investor side, rates have been so sticky for clients because the higher the rate, the less
sticky
cash flow
meaning
you have.
Hard to stomach.
Yeah. Which is fair. I think though that I'm a bit surprised by how quick inventory is moving at the price it's moving in Milwaukee. I feel like last year I was saying you can get something in a C neighborhood that's in fair condition around that 135 to 140K price point, where if it's over that, it's probably going to be in better condition than the average. If it's below that, it's probably going to need work. And that number has shifted drastically in the C neighborhoods, at least. It's almost around like 175, 180K, where that's now like the price where if it's below that, it needs work. If it's above that, it's probably better than the average property. That's been a year. It's been 1 year where we've seen, I feel like the average condition, the good condition duplexes are up 40K in those areas. And then the B and the A areas, it's almost up even more. And so
but the bad condition ones are still sitting on the market.
They're still sitting on the market and they're not moving.
So it matters what condition your property's in when you sell?
Probably. Yeah, it does.
Okay. I feel like this is what I have to ask you is you get the chance to speak to a ton of investors. I do too. And we hear the interest rate thing come up so much. What percentage of the people you talk to say, if the rates come down, then I'll be ready to buy because I can get that better cash on cash? What percentage of the people are the ones that are kind of saying, that's when I'll enter the market and buy?
I think I don't hear a lot of people say that specifically because I know, but they're thinking it. They're thinking like rates suck. the numbers aren't there. And what I see ends up happening is to counteract the rates where they are now, but to get the cash flow that they need, they're then going into less desirable areas because it's still getting the cash return that they want, but it's also a lower purchase price, but it's offsetting their interest rates. But then in that sense, they're losing out on the massive appreciation gains by going into this neighborhood versus that neighborhood, or
having a larger base of the property that you purchased, where it $200,000 property just by nature is going to appreciate in value faster than $100,000 because of how much purchase price you actually bought.
I still feel like, though, the local anecdotes for investors that I work with that are looking to flip properties, you can't find anything on the MLS. It's almost, I have a lot of investors that I work with that spend every single day looking at every single family that pops up, running numbers, and anything that's good, it's a bidding war.
Yeah.
And it's a bunch of investors all outbidding each other versus, hey, how about you just get this one? You get this one, you get this one. I think that'd be collusion. And so I'm not saying we're going to do that, but it's still hard to find flip deals and bird deals. And you got to be scrappy. You got to connect with the right wholesalers, the right agents, the right team that can probably plug you in with off-market opportunities. If you're looking to do flips or birds, you probably also need to maybe start even investing some of your own dollars for mailers, for hiring cold callers, for a billboard that says we buy cash, houses in cash. Because the traditional methods of just going on Zillow, going on MLS to find flips aren't there anymore. And you got to be creative to find those deals.
Yeah, the margin's just not there to have more than one party. You've got to source your own deals to make it work. That makes sense. Well, let's wrap this up. What's new?
What is new, man? I turned 30 next week.
Oh, man.
Yeah.
Well, that hasn't happened yet.
No.
How are you going to live up your last week?
I don't know. That's a really good question.
What did you do over the holidays?
I was in Vail.
Okay.
We haven't done one since the holidays, have we?
That's right.
Wow, man. Yeah, so I was in Vail. We were out there for 7 days. The Airbnb we stayed at was pretty funny. It was like right downtown, could walk to the mountain, awesome location, but this place was straight out of the 70s. It had green carpet.
Sweet.
It had carpet.
Shag?
No, not shag. Shag. It had carpet in the bathroom.
Nice.
Which I've never been a fan of that. Mirrors like everywhere.
Okay.
It was just like it's like a fun house. But also for an Airbnb in Vail, it's why even fix it? Because someone's gonna pay for that. But yeah, dude, it was we had a good time out there.
Good nar?
Yeah, good nar. We shared some nar, of course.
It's gotta be one of my favorite words that you've introduced to me over the time.
How about you, man?
Holidays were great. Got to take off some time, go back to Iowa, see some my family, some friends. One of my buddies got married, so we had a good time at his wedding, seeing a lot of friends all the way back from the high school days, which was great. Got to spend some time with my fiance's family out their place. Unfortunately, it was a snowless, winter, which just feels wrong, especially here in Wisconsin. But it was a good time overall. Again, it's always good to go back, see friends, families, everything else. But
you mentioned snowless winter. I feel like seasons now are just behind a month.
Yeah, I agree. Because now we just got absolutely dumped on.
Yeah, and this used to be like mid-December we should have this weather, but now it's early mid-January. I just feel like everything's like a month behind with the weather.
On next episode, we talk climate change. Well, that's awesome, man. Well, if you guys found value in the information we just covered about the 2023 real estate market and what's coming up in 2024, please subscribe, hit that bell notification right next to it so you know when we post our next market update or content like it. Thanks, and we'll be back again next month with your real estate market update.
Bye, guys.